Imagine this, 11% unemployment, 18% interest. You're getting hit from both sides really hard.
Crazy.
And so that was like, the 90s were tough. We've gotten back to a reasonable interest rate, right?
That's good.
This
Yeah.
sort of interest rate, people's borrowing capacities are up. It's going to help a lot of Australians because now their expenses have gone down. Now, I would say this is going to be the last boom of the 20s. This is it, right? So this is our final boom of the 20s. That's why if you miss this one, you might have to wait to the 30s. The thing is, when you look at a return of 604%, it sounds too good to be true almost. People talk about Bitcoin, right? And you can put $1 in Bitcoin and then it's worth $1.20, $1.50, but it's not 7,000 times higher, right? I'm curious, before you joined that program, did you think it was possible to get 5 properties?
No, not really. No, it was a dream to get one.
But that was at the point where we just needed to find a bit more knowledge and a bit more information, and that's where we came across yourself, and then from there it's just been no looking back. It's been fantastic.
You know, we've got such a supportive group of people, and the problem is property investors, we're rare. You go out there in normal day life and you talk about investing in property, they don't get it, they don't support it. Some people are scared of it. It's crazy. Hi, I'm George Markoski with my beautiful co-host, Christina Markoski. Major banks move to slash interest rates on home loans following RBA cut. Now, this is putting fuel on the fire.
Yay. This is what we've been waiting for. I was disappointed when they didn't drop the last month.
Yeah, this is the thing though. I would say Australian house prices are rigged to blow because it's a perfect storm. And I'm going to go through the state of the nation and go through some stats. And as I was saying before, this is my most important part tonight when I talk, do the podcast, connect with our community and everything else like that. So this is the 1 hour a week that I work and that's it. But funny enough, behind the scenes, there's a lot of work behind the scenes to get here, to get all that research each week and everything else like that. And I've been busy. Lots of newspapers have been calling up, asking for my opinion. So you probably, if you're in, I think I'm in Western Australia and in Sydney at the moment in the paper this weekend, talking about property prices. They called me the property expert. Thank you so much.
That's awesome.
Anyway, yeah, it's great. So let's do this. What I'm going to do is I'm going to share my presentation and talk about what's going on. So the thing is, it's a chain reaction. The banks have already started passing it on. I'm going to just share my screen because, you know, before when the interest rates were going down and banks would sort of take their time passing on the interest rates, they're not doing that anymore. They're jumping in and doing it quicker. And
yeah, I was surprised by how quickly they passed it on because they're normally so slow. They're normally slower than a wet week to move on anything.
One bank did it before the announcement.
Wow, that's how confident they were.
That's how confident they were. So they expect another 2 or 3 rate drops over 25, 26. But I would say now we've gotten back to a reasonable interest rate, right?
That's good.
This sort of interest rate, people's borrowing capacities are up. It's going to help a lot of people, a lot of Australians, because now their expenses have gone down.
Just want to do a little shout out to Chan. Welcome to the community. Great to have you as a member.
Excellent. Welcome. And any other new members, please type in the chat, say hello, and we'll say hello to you in a minute. So this is the perfect storm because we've got the housing target and the lack of properties. We've got migration. And the other thing we've got is jobs. The actual employment rate is going down. Unemployment's going up. Now, a lot of people might think that's bad for property, but as I explained 2 weeks ago, I think it was 2 weeks ago, after that happens, there's normally a boom. So what I want to do now...
Does that mean there's an undersupply of jobs at the moment?
There's an undersupply of jobs compared to what it was.
Right.
But nothing like the 90s. In the 90s, we had an 11% unemployment rate and an 18% interest rate, right? Imagine this, 11% unemployment, 18% interest. You're getting hit from both sides really hard.
Crazy.
And so that was like, the 90s were tough. So
what's the unemployment rate now?
4.5 or something like that. I talked about it in the session. I had it up there. I don't know it off by heart, but I'd say 4.5. Nick probably knows.
Around 4.5. Yeah.
Because Nick knows everything,
Okay.
you know. I just ask Nick if I'm not sure about something. Okay, so let's go through, because history doesn't repeat, but it rhymes. This is what Mark Twain said. Mark Twain once said, history doesn't repeat, but it rhymes. And that's why I like looking at history and we show what's been happening.
I'm shocked at how quickly the banks have passed this cut on. I really am. This has never happened before.
So this is the RBA official cash rate from 2003 to 2025. You can see the little jagged line, right? And each jag is the RBA actually dropping or going up or down, right? So this Tuesday, they trimmed the official cash rate by 0.25%, bringing it down to 3.6%. That makes 3 cuts so far, down from a peak of 4.35%. And most economists reckon we'll see 2 more cuts by mid-2026. So that's the story at the moment. And you can see it's pretty healthy. Now, I want to show you this chart here, right? So this CBA chart shows that rate cuts often lead to double-digit house price growth. Who would have thought, right? So have a look at this. I want to go through some of these graphs just to show you what's happened. So interesting, with if you look at January 1990, they had interest rate cuts, and really property prices didn't do much and they went up. Then let's look at the pink line, August 2008. Interest rates went down, and look what happened to property. It boomed. It just went up. Look at June 2019, what happened to property afterwards. Look at 2015, up. 2011, and now we've got 2025.
Yeah.
Where's that going to head? So you can see every single time it's happened, they've gone up, property prices. They call it dwelling prices here, but that's what a property is. And these are the rate cut cycles, right?
I suppose dwelling is just a broader term to encompass all houses, really.
That's right, yeah. Because, some properties aren't houses. I call it houses, but yeah. So have a look at this. This is the rate cut cycles. So it's interesting to see the rate cut cycle. You see January 1990, they just went down and down.
Wow.
And down, right? Now, funny enough, if you go back to the old thing, the property price didn't go up that much from the January one. They went up more of the others. But so these rate cuts at the moment are a little bit shallower than the others, but still they're going to have some bite.
They're very conservative and they're being slow to release them.
Yeah. Now, housing affordability, right? So housing affordability went down, especially in 2024, and now it's improved a little bit, and it's been getting better. And now this rate cut, housing affordability is going to even become better. However, this is what they're saying, right? Even though the projected rate cuts are going to make it more affordable, there's a big problem. Why? Because in Australia, lower rates and buyer incentives just fuel bigger loans and bigger, higher prices, right? Mm-hmm. So the affordability at the moment is good, but it's going to go down again because it's the property price getting pushed up. Does that make sense?
Yeah, because everyone puts their money in real estate in Australia.
That's right. So, and what's happening with the RBA government? The RBA loan auction clearance rates in capital cities are really good at the moment. They're huge. And now what happens is when the auction clearance rates goes towards 100%, when it goes above 85%, what happens is that pushes property prices up. Because
George, every single group buy we've done has been 100% auction clearance rate.
Exactly. And that's part of the reason why it's in the top 100. See, what happens is when you have 100% auction clearance rate, what that means, it means there's a lack of supply and there's a lot of demand. So auction clearance rates are really, really important. And if you go to a suburb and they've got a very low auction clearance rate, then that can be a big concern. Did you lock the dog out because he loves barking?
He growled to get out of my office, so I let him out, but now he's barking.
Yep. Yeah, he's always very good. As soon as you and I are doing the weekly Money for Life, he likes to be naughty. I'll call him up here if I need to, Christina. Okay, so I want to show you this graph here. Here's the big one. Every time the RBA starts cutting rates, houses prices rise, often by double digits. So if you look here, in 2003, they rose 32%. In 2021, they went up 27%. You look at 1988, 60%. But so 84, 86, 98, 92, 98, 2003, 2010, 2013, 2017, 2021. That's every single year that they drop rates. And what is it? What happens? Every single time, property prices have gone up. So look at that. I don't think we need any more proof, do we? When something happens every time, it's pretty reliable. So that's the state of the nation. That's what's been happening. And literally, we're set for the boom. Now, I would say this is going to be the last boom of the 20s. This is it, right? So this is our final boom of the 20s. That's why if you miss this one, you might have to wait to the 30s because there's only so much we can boom. Now let's go through member wins. Do you want to go through this, Christina?
Yeah. So Greg and Suzanne from SA brought up Redbank Plains, Queensland, settled January 2025. They did a price of 600,000. Deposit was 60,000. Currently valued at 683. So profit of $83,000. ROI 138.5%. That is huge.
138% is pretty damn.
Wow. It's been less than a year. It's been what?
Well, look,
7 months.
The thing is, I mean, if you put 60,000 in the bank, how much would you get after a year? I don't know. Can someone give me the answer and put it in chat? I think it's probably around about.
Greg is here. Greg, would you like to come on camera? Congratulations.
Greg's here. Oh, even better.
Amazing. And you're getting your orange belt this year at the event.
Let's
Hello.
do it. I'm glad you found him.
Hey, look at
Hello.
that.
How are you?
Legend. How are you? Now, where are you at
good,
the moment?
thank you, George. Sorry?
Where are you at the moment?
I'm in Adelaide.
You're in Adelaide. Oh, there you go. We're in Adelaide
Yeah.
too. There you go. Excellent.
I'd just like to say too, it actually came back at 734.
734. Okay.
Yeah, that's what Amanda has said. So, yeah, we're pretty
Wow.
wrapped and we're buying another property from that one.
Wow.
Oh,
So even
fantastic.
higher than the valuation we had up on the screen there.
It is, yeah. Yeah, it's just, yeah.
Can
There
we
you
do
go.
some
We have
quick
to-
math?
Could someone do the quick math? Exactly. So that
Let me. So
I'm
what
not
was the
good at
exact
maths.
number there that the val came back at, Greg?
It was 734.
734. And what did you buy it for?
Yeah. Bought it for 599.90.
Oh, that's
Yeah.
right. It was about
600,000.
600,000.
Yeah.
That's it. Yeah.
Okay, great.
Yeah.
So, Greg, so you got your orange belt. That means you got your second property, and what I've heard is pretty exciting. So you bought the property in Redback. It's gone up in value,
Yep.
and now you're taking the equity out and using that to get
Yes.
the next property.
Yeah. So we're getting
Because-
one in Burpengary soon. Yeah.
Burpengary. Excellent. And
Yeah.
That's $134,000
Yeah.
profit.
yes.
Yeah.
So, and you settled on this property in January, correct?
We did, yes.
Yeah,
It was
that's
actually
great.
settled. No, that's when we joined up in 24. So it was actually July 24.
July 24 when it settled. Fantastic.
And we settled in January 25. Yeah, it was
January
yeah.
25. Yep. So that was about 5-6 months ago, right? You
Yeah.
settled. Yep. And in that time, you've gotten over 100,000 equity. But this is the exciting part, and a lot of people don't get this, and that's why I want to try to dig down, because you can get a property, and you get equity, and people are like, well, what do you do with the equity? Well, you can get the equity, refinance. That's what you're doing now, and then put it into another property straight away. And that's the beauty of getting something in the top 100, because normally to get equity in a property takes years. And the whole point of buying the top 100, we can get there a little bit quicker, and sometimes a lot quicker, like we did with you, Greg, which is great. And now at Burpengary, you're going to go onto your green belt. So
Yes.
I'm just curious about your journey. What was the hardest part of all this?
To start.
Pretty much. Yep. What was holding you back from starting?
Mindset and fear. The fear was the main thing.
Yeah. What were you scared of?
It was failing, not knowing what to buy. I did a lot of research myself over the years, and came back to one thing: fear. What if I buy that and it doesn't work? And since we found you guys in it's been 18 months now, and we're possibly going to be up to 5 properties.
Wow.
So
That's amazing.
Wow.
I've learned so much more in the last 18 months than I've learned in the last 20 years. So thank you guys. I just have to say thank you.
Hey, thank
helped
you
us a
for
lot.
trusting us and having the courage to do it, because it's very hard to do this sort of thing.
It is definitely, yeah. It's not easy. You got to get your head around it. You got to get your mind straight. Yeah.
Yeah, and
Absolutely.
how'd you get past the mindset thing? Because, you know, obviously you did a lot of your own research, but then joining our program would have been a mindset shift as well. Would have been hard.
Watching it over the years,
How did you
George.
decide to join? Yeah, sorry.
Yeah, watching the booms over the last 15 to 20 years, and just seeing properties go up in value and not doing anything. So we pretty much went to we actually went to Renmark and had a look around there, because we thought, oh yeah, there's properties up there which are really cheap. And like I said, we're looking at them. They just need a lot of work and everything. And we were driving back home, and I thought, oh, no, this is a gamble. If we do this, it's just gambling. You know, we don't know what we're doing. So yeah, we thought we wanted to seek out some help, and we found you guys. Yeah.
Excellent. I'm really glad. I'm really
and
pleased.
we're not looking back.
Yeah, fantastic. Now,
Well, you're going to be getting your blue belt this year, so that's amazing. It's quite the achievement.
Hopefully,
the green belt,
yeah,
Christina.
yeah.
Green belt.
Is it? I was counting on your wall there, George. So 5, right, Greg?
No, but I don't think he's going to get 5 this year. He said 5
Not
or
this year, no.
Yeah.
No.
Oh, okay.
He's getting 3
Yeah.
He's getting 3
3
now.
this year, so you'll be getting your blue belt next year.
Yes.
Yeah.
That's right. That's
Definitely.
right. I'm curious. Before you joined that program, did you think it was possible to get 5 properties?
No, not really. No, it was it was a dream to get 1.
Wow. There you go.
Yeah.
Well, look, Greg,
So,
I'm really sorry. Keep going.
No.
I'm just saying I'm really proud of you for having the courage and stepping up and doing this for you and your family, and getting through that mindset shift, because it's not easy. And then once you're past that, then you can never go back, which is great, because you're now a believer and you understand this works, which is great. So well done for implementing, because we can give you all the tools and everything, but unless you do it, it's not going to happen.
100% right, George. You got to do it.
Yeah, you did it. So well done. Excellent. Thank you for joining us.
Thank you too.
Awesome.
No worries.
Thanks,
Okay,
Greg.
Christina.
Awesome.
I'm really glad Greg was here. That was great. And if we do any shout outs and you're here, let us know. We'll try not to embarrass you. Okay. Daryl from WA. He bought
a Kirby, New South Wales, settled in March 2023, priced at 485. Deposit was 48,000, currently valued at just under 780, so 779. Current profit just under 300 grand. Wow.
Return investment 604%.
That's massive.
The thing is, when you look at a return of 604%, it sounds too good to be true almost. Daryl, are you here with us tonight? If you are, type in the chat. And he's an orange belt, so he's on his 3rd property. So I'm very excited about some of these results. They're great. It's awesome. Okay, next. Tonight's going to be quite a short Money for Life, actually. Next, and I'm the one that's controlling it all. Sorry. Craig and Tanya from Victoria, and they bought in Wowler. Land settled December 24. Build ongoing. Land price 55,000. Deposit paid 1,000. Land currently valued 125,000. 7,000 return on their investment.
Wow.
I know.
$1,000 down, and they've already got the land valued at 125.
Yeah. People talk about Bitcoin, right? And you can put $1 in Bitcoin and then it's worth $1.20, $1.50. But it's not 7,000 times higher, right? That's the thing.
That's amazing.
Craig and Tanya,
on 5 properties.
Well done. And they're blue belts. They've been kicking butt. They've done really well. Okay. So, and this is...
Craig is here, George.
Okay.
That's what I just saw on the... There we go. Hi, Craig.
Here we go, Craig. How are you, Craig?
Good. How are you?
Really well. Christina, you know what we should do? If we're going to be doing these things, we should invite whoever's on the slide to join us anyway, but they have anyway. So thank you, Craig, for joining us.
It's worked out well.
It's worked out well.
Yes, and I've ended up in a lot of breakout rooms with Craig, so I feel like I know Craig really well.
That's why he's doing so well on the program.
That's it.
He's
That's
halfway
right.
to black belt already. Wow.
Christina, I go in the breakout room. I go, Craig, come on, get another property, do it. He's like, yep, okay. Anyway, Craig, you're a blue belt now, and blue belt's quite significant. So well done.
Yeah, no, it's awesome. It's been great.
I'd
Really
like
good.
to hear a bit about your journey because 7,000% return. That sounds pretty crazy.
It's very crazy. It's been awesome. So we had a property. We were in a different group prior to this, and we built over in WA in Eglinton.
Yep.
And that was during COVID, and there was building delays, and it was an absolute mess. It got there in the end, and the property's been fantastic past that point. But that was at the point where we just needed to find a bit more knowledge and a bit more information, and that's where we came across yourself, and then from there it's just been no looking back. It's been fantastic. So we've got SMSFs set up with Aiden, and we've got property in Caboolture that I think is a couple of months off.
Yep.
And then Whyalla, which we sorted out last year in Adelaide at the event, which was brilliant.
Oh yes, the event, that was good to see you there.
Yeah, and then Burpengary just recently.
Yeah. So how long you've been in the program for? You got 4 properties very quickly, didn't you?
Yeah, very quickly actually. So I think it was around about January last year.
Wow.
Right. So you've been a year and a half and you got 4 properties already under your belt. Wow, that's exceptional.
So it's been brilliant, amazing, more than we could have ever dreamt about. It's been brilliant.
And looks like all your properties are doing well because I've heard the suburbs and all of them have done very well, which is great.
Yeah. We're watching closely on Caboolture and around that area, and it seems to be going really well. So it's awesome.
What was your biggest challenge before you joined our program?
Was working out cash flow and how to grow, and how to not just get one property and just sit and think about it, but how to actually build from that, and just the knowledge to do that, I think, has been the biggest thing that held us back for a long time. And now that with Charmaine and yourself and the whole team, it's just been brilliant. There's so much support, which is great, and even the other members as well. Just chatting, I think that was the best thing about Adelaide last year, was just chatting to other people in the same situation and hearing what they went through and the challenges, and being able to get through it, and talking with like-minded people is awesome.
I'm glad you mentioned that, because what I find is people that come to our 2-day event, they end up getting a lot more properties than people that don't. It's amazing, because they say proximity is power. And, we've got all this Zoom stuff, and I love it that everyone's here on Zoom. We're all catching up, and I love that. But catching up in person, pressing the flesh is different. It's a different feel. And especially if you're starting, or if you want to grow your portfolio, I really strongly suggest to everyone you should come along to our 2-day workshop, and that's going to change your mindset to what's possible. Because a lot of people think, if I get one, that'd be exciting and great. And then a lot of people commenting saying, well done, Craig, which is great. And, we've got such a supportive group of people. And the problem is, property investors, we're rare. And you go out there in normal day life and you talk about investing in property, and people don't get it. They don't get it. They don't support it. Some people are scared of it. And it's crazy. But I think, well done. Good on you, Craig. Thank you so much.
Awesome. Thanks, George. Thank you.
Okay. So that was our member wins. And what I'm going to do now, we're going to go into our deep Q&A in our private group. We're going to switch off the live stream. So thank you, everyone on the podcast, for watching us on YouTube, on Facebook. But now we're going to a private group. We're going to start talking.